Hello everyone, I'm Renuka from Ajayastromoneyguru, first astrofinance digital channel, which is first global multi-business language channel. I welcome you all here on 2nd March 2022. Today major news are dollar in demand, euro heads south with traders risk averse. The US dollar pushed higher in early European trade Tuesday, with the euro under pressure with the intensifying conflict in Ukraine prompting demand for the world's reserve currency. At 2:55 a.m. ET, the dollar index, which tracks the greenback against a basket of 6 other currencies, traded 0.3% higher at 97.660. Russian forces have intensified the bombardment of Ukrainian cities, warning residents of Kyiv to leave as a mile-long convoy of armed vehicles draws near to the capital. This is resulting in traders seeking out the dollar, the globe's reserve currency, main safe haven, and most liquid asset. Recent headlines that Russia is escalating nuclear preparations and that the West is imposing increasingly tough sanctions, including freezing assets and cutting off certain Russian entities from the SWIFT interbank communications network, suggest that the risk of tone may linger throughout the week and potentially beyond, said Matthew Weller, global head of market research at Gain Capital. The ruble is continuing to decline despite of Bank of Russia doubling its key interest rates to 20% as investors weigh the impact of tough economic sanctions on Russia. But of the major currencies, it's the euro that is being hit hardest as the severe sanctions on Russia and surging oil prices raised concern about a hit to Europe's economy and growth. At 2:55 a.m. ET, USD RUB traded 2.1% higher at 103.3218, while Euro USD fell 0.3% to 1.1098, just above a new 21-month low, with the 1.110 support level surging to hold. Although there are many reasons to be long of euros at the moment, from a technical perspective, the potential seems to be building for a short squeeze, said Jeffrey Halley, Oanda senior market analyst for Asia Pacific. A new Ukraine-Russia meeting or progress by China is brokering some sort of ceasefire would be enough to spark a 200-point rally. Traders will look to the release of Eurozone CPI data later in the session, with the European Central Bank having to balance between surging inflation and the potential for a hefty hit to growth in the region on the back of Russia's invasion of Ukraine. Elsewhere, GBP USD fell 0.2% to 1.3292, USD JPY rose 0.2% to 115.16, while the risk-sensitive AUD USD rose 0.1% to 0.7252, helped by data showing the Australian economy performed strongly in the fourth quarter. Later in the session, Fed Chairman Jerome Powell will testify on matters economic before the House Committee on Financial Services, with investors keen to know his thoughts about the potential fallout from the conflict in Ukraine, given the central bank is widely expected to lift interest rates later this month to curb soaring inflation. Finally, USD CAD fell 0.1% to 1.2734, with the Bank of Canada expected to start rising interest rates later in the session with inflation at a 3-decade high. So that's all for today's news. Requesting our viewers to kindly like and subscribe our channel. If you haven't subscribed it yet, don't forget to press the bell icon so you can get the timely updates from us. You can also contact us on the following number for the advanced predictions that you will be needing on the special reports. You can also watch our other videos on this channel like stock market, bullion, gold, agro-gene, non-agro commodity, etc. So that's all for today. Thank you for watching. Have a good day.